Hello everyone, good morning, good afternoon, good evening, depending upon when you are watching this video. In the earlier classes, we discussed about the rates of tax for assessment year 2020-21 in accordance with Finance Act 2019. We understood some of the special rates of tax which are mentioned in Income Tax Act also, though we don't use them right now. And we have discussed about the steps involved in computation of tax liability of any SSE wherever different types of provisions are applicable, like rebate in case of only resident individuals, surcharge in many cases, marginal relief only in some cases. Like this, the procedure for computation of tax liability has been discussed, and we are applying that also while solving some of the numerical questions as practice questions within the tasks that are given to you. And we discussed about the rates applicable for individuals, HUF, AOP, BOI and artificial juridical person. Particularly in general, what are the rates applicable, and what about in case of resident individuals who are senior citizens, means those who are having an age of more than 60 years but less than 80 years. We can call them for convenience purpose senior citizens. For convenience purpose, we can call those who are more than 80 years old as super senior citizens. For them, how to calculate the tax liability, we have discussed that. The difference is, for a normal SSE, basic exemption limit is 2,50,000, whereas for a resident senior citizen, basic exemption limit is 3 lakhs. Calculations will change accordingly. This will change. When it is a resident super senior citizen, the basic exemption limit itself is 5 lakhs. Remaining slabs will be staying as they are, but calculations change because of different basic exemptions limits for normal SSE, resident senior citizen and resident super senior citizen. These calculations how to do, we have discussed already in the earlier session. In addition to these rates which were already summarized here, there are particular provisions in relation to surcharge. How much surcharge is applicable depending upon the income of the SSE, and for whom these surcharges are applicable? For all the SSEs who are individuals, HUF, AOP, BOI or artificial juridical person. If the income of that SSE is more than 50 lakhs but less than or equal to 1 crore, means up to an income of 1 crore, after the income exceeds 50 lakhs, surcharge is 10%, which automatically means if any SSE having income of less than 50 lakhs, even exactly 50 lakhs also, there is no surcharge. So surcharge starts when the income exceeds 50 lakhs but does not exceed 1 crore. Then the surcharge rate is 10%. The same surcharge will be 15% if the income exceeds 1 crore but does not exceed 2 crores. The same surcharge is 25% if the income exceeds 2 crores but does not exceed 5 crores. If the income exceeds 5 crores, then the surcharge will be 37% of income tax. And a point to be noted very importantly, the surcharge has to be calculated on base tax, that is income tax, not on income. That is very crucial provision, particularly for high income earning SSEs who are individual, HUF, AOP, BOI, etc. Then we also discussed a very important provision in relation to rebate under section 87A, which is also applicable in a special case of a resident individual only, that too who is having an income of not exceeding 5 lakhs rupees. Maximum amount of rebate will be 12,500 rupees if the actual tax payable by the SSC is less than 12,500, that amount itself will be given as rebate. So the point to be noted, practically if there is rebate available to an SSC under section 87A, tax liability will always be nil. Naturally. Why? Because rebate itself is applicable for only resident individuals, and for resident individuals the rate of tax is 5% if the income is between 2,50,000 to 5 lakhs. So whatever the income may be which is falling between that two numbers, that will be definitely the tax liability of less than 12,500, which will be allowed as rebate under section 87A. So naturally the income tax payable for a resident individual up to an income of 5 lakhs is always nil due to the application of 87A. And 87A is anyway not applicable for non-residents, which means for non-residents the tax payable will be there even though the income is between 2,50,000 and 5 lakhs. For residents, the tax payable if they are in that slab, which is the 5% slab, will become nil. That is the application of 87A which we discussed. After doing all this base tax calculation and adding surcharge if any, then deducting rebate if any. Once we deduct rebate, the tax liability will be nil anyway. But basically after adding surcharge if any, we have to calculate cess at the rate of 4% of income tax plus surcharge if applicable. What if surcharge is not applicable? Just 4% of income tax. Income tax here means that is base tax. So the base tax plus 4% is the final tax liability of the SSC. Of course, however, you have to remember two steps always. One, before starting the calculation of base tax, we should round the total income to the nearest multiple of 10 under section 288A, and after adding the cess, which is giving us the tax payable finally, that tax payable also has to be rounded off to the nearest multiple of 10 under section 288B. These are all the points which we discussed in the earlier sessions, and we applied them also in solving some of the questions. There is one point here to be noted when it comes to the age of the SSC. Age of the SSC, does it matter for a non-resident? Answer is no. If the SSC is a non-resident, age does not matter at all. Why? Because all these higher basic exemption limits are available only for resident individuals. Hence, for a non-resident, the age is immaterial. Irrespective of the age of non-resident, the tax rates applicable will be the core rates that we have discussed in the earlier classes. So, age is relevant only for whom? Residents. Another point, sometimes to confuse in the questions, you will give the gender of the SSC. Another question comes, does the gender matter? Will there be a different tax rates for male SSCs and female SSCs? Answer is no. The gender also does not matter. What only matters is residential status of the SSC, and second, age of the SSC, that too if that SSC is a resident. If that SSC is a non-resident, age also does not matter. But when it comes to a resident SSC, when we have a person who is a resident SSC, age is an important aspect, and a question automatically becomes relevant. So how do we determine this? Because people will be having birthdays on different days of a year. How do we get that? Whether the person has attained the age of 60 years or not in the previous year. So there are two things that we have to keep in mind. When we calculate this 60 years or 80 years, this 60 years is that where that individual is having the age of 60 years or more. So here, what is having a 60 years age? Is it like entering into 60th year or completion of 60th year? That is a point which becomes a practically important aspect. So, the point here to note is, there is no need that the 60th year has to be completed. If an SSC enters into the 60th year, That means he has attained the age of 60 years, we can say. Attaining the age of 60 years is different. Completing 60 years is different. The law never said completing 60 years, which means even those who enter into their 60th year also are considered as senior citizens for this purpose. So that is why 60 years or more. That is what is the meaning here. Same way, 80 years or more. At any time if they attain 80 years during the previous year, then they will be called as super senior citizens and this calculation will be applicable for them. However, there is a particular speciality in some case. This is not normally going to happen, of course, but still there will be people who have this exceptional case. Irrespective of the practicality, in the exam questions, these can be twist points. So let us understand one special case here. What if a person is having his birthday on 1st April exactly? So, what do you say that when a person is having exactly 1st April as a birthday? According to the CBDT circular, a person born on 1st April would be considered to have attained a particular age on 31st March itself. Means what? The day preceding the anniversary of his birthday. Why and all we cannot ask. That is CBDT circular. If you ask why only 1st April, why not 2nd April, is 2 days going to make a difference? Then also there is no answer. But one day definitely is going to make a difference. Because that one day is making him a senior citizen in the next year. So in order to give benefit to them, rather than going to next year becoming a senior citizen, he can be called as a senior citizen or super senior citizen. So his birthday is deemed to be 31st March instead of 1st April. Simple. So the essence of all this is simple. Where a person is having his birthday on 1st April, for income tax purposes, his birthday is assumed to be not 1st April, but 31st March. Calculations of 60 years and 8 years have to be done accordingly. Of course, will the birthday of a normal person matter? That doesn't matter. Nobody cares about that. Income Tax Act also doesn't care about that. When this birthday matters, when that person is attaining an age of 60 years or 80 years on 1st April, what the Income Tax Act deems to be, though it is not mentioned in the Act, CBDT circular mentions that it will be deemed that even though that person's birthday is 1st April, it should be considered as if it is on 31st March. Right? Look at the example here for understanding this particular circular. Second paragraph. A resident individual whose 60th birthday falls on 1st April 2020. 60th birthday, that is, once again, once a person enters into the 60th year, that is called 60th birthday, automatically that person can be considered as senior citizen. There is no need to complete 60 years. Entering into 60th year is 60th birthday, so that will be considered as senior citizen if anybody is having 60th birthday during the previous year. Normally that's okay, but this special case what we are talking about, there will be definitely few thousands of people in the entire country who will have their birthday on 1st April. So there are some people. There is a person who is a resident individual whose 60th birthday falls on 1st April 2020. Then what we will do? Under normal circumstances, without this circular, in which previous year we can say he has attained 60 years? We can say only in the previous year 2021. Normal circumstances. But according to this circular, it is exceptional. This circular gives 1 day cushion. So instead of 1st April, the birthday will be deemed to be 31st March, which means he is deemed to have attained the age of 60 years in the previous year 2019-20 itself and would be eligible for higher basic exemption limit of 3 lakhs for the assessment year 2020-21 since he has attained the age of 60 years in the previous year 2019-20. However, understand this very clearly. Actually, he did not attain in 1920, he attained in 2021. Just 1 day difference is pardoned. His 1 day difference is just negligible. So the CBDT has said those people just by chance. Naturally, birthday is not something by choice. So most of the people just by chance, if their birthday is on 1st of April, don't worry, you don't have to wait for one more year to become a senior citizen. Just because of that one day, you will not be postponed with your higher basic exemption limit. You can claim the higher basic exemption limit from this year itself. Why? Because the essence of all this is, if any person's birthday is on 1st April, that birthday is deemed to be on 31st March, the day before. So naturally, when he has become senior citizen also will be in a different year. In this case, instead of 2021, he would be deemed to have become senior citizen in the previous year 1920 itself. So he will be eligible for a higher basic exemption limit for the assessment year 2020-21. Same logic applies to 80th birthday also. Logic is same whether it is 60th birthday or 80th birthday. Of course, basic exemption limit is different. In case a person attains 80 years of age, then he will be eligible for a basic exemption limit of 5 lakhs rupees. So if any person attains an age of 80 years on 1st April 2020, rather than waiting for the previous year 2020-21, we will consider him as a super senior citizen for the previous year to 2019-20 itself, because it is deemed that his birthday is not 1st April but it is 31st March. So from the assessment year 2021 onwards, he can continue to claim a higher exemption of 5 lakhs rupees. That is a kind of relaxation benefit, you can say, granted by CBDT. Of course, not to everybody. These birthday things are not that relevant. Only relevant for determining whether somebody is a senior citizen or somebody is a super senior citizen. And always you have to keep in mind this age, senior citizen, super senior citizen, age, birthday, all these things will be only and only applicable when the SSC is resident. If the SSC is non-resident, there is no need to even bother about the age of the SSC, right? These are the points to be noted. Now, coming to the exercise or task that has been given to you. Most of you, as I observed, have done this correctly. Check your answers with this one by one. A is a resident. Resident age matters. Age is below 60 years or 80 years, so no speciality. Total income has to be rounded first. Then calculation is straightforward. Income minus 10 lakhs into 30% plus 1,12,500. That is the base tax in case of A. Then, is surcharge applicable? Answer is yes. Since the income has crossed 5 crores, how much surcharge is applicable? 37% surcharge is applicable. Then after surcharge, both base tax plus surcharge, on that 4% of health and education cess has to be calculated, and then the total tax payable is the sum of all the three: base tax plus surcharge plus health and education cess. After rounding, final answer is this: 2 crores 62 lakhs 91,210. That is the answer for first bit A. Name of the SSC is A, resident, a normal aged resident, and final answer is that. Same way for B, the final answer is 4 lakhs 5,810. For the normal type questions, there is no need to explain anything special here, because rounding is common, calculation of base tax is common, having 30% rate plus 1,12,500. Here surcharge is not applicable since the income did not exceed 50 lakhs. So no surcharge. Cess is common. Add these two, we'll get 4 lakhs 5,812. Round it. 4 lakhs 5,810 is the answer for second question. Then C, resident but 58 years. So normal person once again, but income is 5 crores 88 lakhs, 58 lakhs 85,000, not 5 crores, 58 lakhs 85,150, that is rounded first. Calculation of tax is once again same. Since the income has exceeded 50 lakhs but did not exceed 1 crore, the surcharge applicable is 10%, that is calculated. Cess is common, so final answer is 18 lakhs 5,280. Then Non-resident, D is a non-resident, age is 63. So this is where you have to be careful. For a non-resident, we should not even look at the age. Even though 63, 83, 243, we don't care. For non-resident, age doesn't matter. So normal calculation, same way like above. Income minus 10 lakhs into 30% plus 1,12,500. Since the income here has exceeded 2 crores but did not exceed 5 crores, the surcharge applicable, we have to remember that table, here is 25%. Cess is common. After adding all that, final answer is 1 crore 65 lakhs 34,440. That is for D. Then E. E is a resident, 81 years. Resident 81 years. You have to be careful here. This guy is a super senior citizen. For a resident, the calculation will be different now. Income is 1 crore 22 lakhs. Look at the calculation. Calculation is not same. Income minus 10 lakhs into 30% is okay. But how much we should add for a person who is a super senior citizen? Instead of 1,12,500, we should add only 1 lakh. Because the higher basic exemption limit of 5 lakhs is applicable for that person. There is no first slab at all for them. Straight away their tax calculation starts from second slab. First slab is not at all applicable. 5% slab is not at all applicable for a super senior resident individual. Hence, directly second slab means between 5 lakhs to 10 lakhs, 20%. That is 1 lakh. That should be added. Above 10 lakhs, whatever the income is, on that 30%. So after doing this, we get a base tax of 34 lakhs 60,000. Surcharge applicable here is 15%. Why? Since income has exceeded 1 crore but did not exceed 2 crores. Cess 4% is common. Add all of that, round it. We got 41 lakhs 38,160 as the correct answer for that question. 41 lakhs 38,160. Next. F. Resident normal guy. So direct calculation. Final answer is 26 lakhs 38,180. But only point is there is a surcharge of 10% since income is between 50 lakhs to 1 crore. Non-resident, anyway we don't worry about the age. Directly calculation of income tax is common. Surcharge you have to be carefully selecting since the income is more than 2 crores but less than 5 crores. Surcharge applicable is 25%. Cess is common. Final answer is 1 crore 45 lakhs 11,210. Then H, normal resident, 59 lakhs is the income, so surcharge will be there. Base tax is common calculation, nothing special. Surcharge here is 10% since the income is more than 50 lakhs but less than 1 crore. Then cess is common. After adding it, final answer is 18 lakhs 16,440. I is a resident, but again look at the age carefully. Resident 66 years means senior citizen. When we have a senior citizen, then calculation of tax will be different. Instead of adding 1,12,500, how much we should add here? 1,10,000. For super senior citizen, it would be 1 lakh. For a senior citizen, it will be 1,10,000 since basic exemption limit is 3 lakhs. Right? So when there is 3 lakhs, basic exemption limit, 3 lakhs to 5 lakhs. 3 lakhs to 5 lakhs. How much is the amount there? 2 lakhs. 2 lakhs into 5% is 10,000. Then 5 lakhs to 10 lakhs, difference is 5 lakhs. That into 20% is, that is 1 lakh. Total 1 lakh 10,000. So that will be added to the normal calculation of 30% of income in excess of 10 lakhs rupees. That is for residents. So this calculation is important. Everybody should check this answer. Then surcharge is common, which is 15% in this case since the income is more than 2 crores but less than, more than 1 crore but less than 2 crores. So cess is common. Final answer is 59 lakhs 59,580. 59,580. That is the answer for I. For J, again non-resident, even though 84 we don't care, calculation is quite normal. Same income minus 10 lakhs into 30% plus 1,12,500, no difference there. Surcharge you have to be careful because the income is more than 2 crores but less than 5 crores. Surcharge is 25%. Cess is common. After adding all this, final tax payable by this SSC J is 82 lakhs 97,210. 90 after rounding also. That is the final answer. K, resident 64. Once again, 64 means senior citizen, be careful. Then after rounding, calculation of base tax. Look at the calculation of base tax. Income minus 10 lakhs into 30% is common, but instead of adding 1,12,500, how much we should add here? 1,10,000, because he is senior citizen. There will be a reduction of 2,500 rupees. We know why. That is the higher basic exemption limit of 3 lakhs, which gives a benefit to resident senior citizens. Then surcharge again always depends upon income. Here income is between 2 to 5 crores, so naturally surcharge is 25%. Cess is always 4%, no change in that. After adding everything, final tax payable by K is 80 lakhs 42,590. Then we have L, non-resident, we don't care about age, calculation is quite normal. Income minus 10 lakhs into 30% plus 1,12,500. Surcharge here has to be depending upon the income. Once again, income is between 50 lakhs to 1 crore, so surcharge applicable will be 10%. Cess is common, final tax payable in this case is 21 lakhs 4,480. These are the answers for the questions which you have already given the answers in the group. Check these answers once again, and if at all you did any mistake at any of the steps, you can correct them and you can identify which step went wrong. So that is the reason why I am sharing this with you stepwise. Though I asked you only the final answer, for checking purposes, you need to check where it went wrong. If final answer matches, no need of any checking, because final answer matching means all steps are correct. If final answer is not matching, then you have to check one by one, step by step, where this went wrong, and you have to rectify that. Most important point is, doing mistakes is one part, rectifying from those mistakes is a very important aspect. You need to keep that in mind. Now, after all these basic things which are actually enough, in fact, in relation to computation of tax liability of individuals, which is going to be most of the cases our requirement in this particular paper, still as an MCQ, separately the tax liability of different types of SSCs can be also asked. As far as normal questions of computation of total income and tax liability are concerned, definitely those are going to be asked about individuals only, and we have completed all the discussion in relation to computation of tax liability of individuals. That is over. Now, only as a MCQ, there could be a separate question on the computation of tax liability of other types of SSCs. What we have learned so far is individual, HUF, AOP, BOI and artificial juridical person. In that also, mostly what we use will be individual. What about a firm? What about a company? What about some other organization like a cooperative society? There are tax rates applicable for them also. But practically those are much easier. There is nothing much to literally remember. What is there to be remembered will be not tax rates, majorly the surcharge rates will be important points to be remembered for other SSCs. So after the completion of discussion of computation of tax liability of individuals, let us move on to computation of tax liability of other types of SSCs. First point, look at this. In case of a firm or LLP, one point we should already know, Income Tax Act does not distinguish between firm and LLP, both are same. And what is the tax liability or tax rate applicable? 30%. 30% on what? Income. No slabs here, flat rate. Imagine a firm has only 10,000 profit. Will it pay any tax? Answer is yes, it should. 10,000 into 30%, it should pay 3,000 tax. Of course, plus 4% cess is common always. So if a firm, a partnership firm has earned a profit of, for example, say 10,000 rupees, it will pay a tax of 10,000 rupees into 30%, that is 3,000 plus 4%, which is 3,120. It has to pay tax. That is the point here to note. 3,120 has to be paid by the firm. So the tax liability here, there is nothing to calculate as far as we're using the slabs and all. Straight away, whatever income, multiply with 30%. So no big deal about computations, easier than individuals. Individuals only will have slabs and all that. Firm directly 30% of income, local authority also 30% of income if there is income which is taxable in the hands of local authority. We don't care about what is that. If it is given, we should know that the rate applicable for them is 30%. Firm LLP also 30%. Then cooperative society has a little bit slab type of structure where the total income does not exceed 10,000 rupees. See the slabs here, very small slabs, not lakhs in case of individuals like. Here it is only 10,000 rupees. If the income does not exceed 10,000 rupees, then 10% of total income. Second slab, where the total income exceeds 10,000 but does not exceed 20,000. So exceeds 10,000, so first slab 10,000 into 10% will be anyway there, that is 1,000 plus 20% of the amount by which the total income exceeds 10,000 rupees. So income minus 10,000 into 20% plus 1,000. That is what is the calculation in case of cooperative society. So first slab is up to 10,000, 0 to 10,000. So 0 is no tax. Starting from first rupee itself, tax liability will start. Of course, rounding of 10 rupees will not make any sense if there is starting from first rupee itself. So don't worry about 1 rupee and all. Basically, any reasonable amount over 0 up to 10,000 rupees is taxable at a rate of 10%. So there is no basic exemption limit and all that here. Straight away tax will start for cooperative society, but rates are different. Rates are little slab based. So 0 to 10,000, 10%. 10,000 to 20,000, 20% plus 1,000, which is related to the previous slab. Then where the total income exceeds 20,000, then rate is 30% of such income which exceeds 20,000 plus 3,000. You can understand what is this 3,000. 3,000 is not just a blind number, it has a logic. What is the 3,000? The income tax related to the earlier slabs. First slab what? 0 to 10,000. That means difference is 10,000 into 10%, which is 1,000. Keep it aside. Second slab is what? 10,000 to 20,000. Difference is 10,000, but tax rate is 20%. 20% on 10,000 is 2,000. Keep it aside. 2,000 plus 1,000, how much? 3,000. That 3,000 is what we are talking about here, plus 30% of the amount by which the total income exceeds this 20,000 rupees. So in the first case here, what we have to calculate is, if at all the total income does not exceed 10,000, what we have to calculate is income minus income directly into, there is no minus, no basic exemption limit, into 10% directly. So in case the income of the cooperative society does not exceed 10,000, in that case, let us say 8,000 rupees is the income of cooperative society. So income, whatever income into 10% directly is what we have to calculate there. So in the other case, let us say the second scenario where the income exceeds 10,000 plus but does not exceed 20,000. Imagine, just for example, income of the cooperative society is 15,000. Then how do we calculate? Income minus 10,000 into 20%. This is on one side. Income minus 10,000 into 20% plus 1,000 already, which is there in relation to the earlier slab. So just understand this, how this will be calculated. So in this case, income minus 10,000 into 20% plus 1,000 rupees. That's what is the calculation in respect of second slab. When is that? If the income of cooperative society is somewhere between 10,000 to 20,000. What if it exceeds 20,000? Then we can use a similar thing, but here what we should do, income minus 20,000 into 30% plus 3,000. This is the formula in relation to calculation of income tax of cooperative societies. So if the income does not exceed 10,000, directly income into 10%. If the income is between 10 to 20,000, then income minus 10,000 into 20% plus 1,000. If the income of cooperative society exceeds 20,000, then income minus 20,000 into 30% plus 3,000 rupees. So rates, if you observe, 10%, 20%, 30%, directly 10, 20, 30 in sequence they are there. But only point is you have to also take care of the income tax related to the previous slab always. In the first case there is no previous slab, so directly income into 10%. And in the second case there is a previous slab already which has a tax of 1,000, that will be added here. In the third case there are two slabs. First slab has an income tax of 1,000, second slab has an income tax of 2,000. Put together 3,000 is there to be added to this slab of 30%, which is calculated on the income exceeding 20,000 rupees. That's it. That is about the different calculation methodologies of different SSCs. So firm 30% flat rate, local authority 30% flat rate, cooperative society, be very careful. These are the three different types which are important to be noted when it comes to computation of tax liability of cooperative society. Are we going to have assessment of cooperative societies and all? Don't worry, no, we don't have any of that in syllabus. Only assessment of individuals is in syllabus. Then why are we doing all this? Here it is not about assessment of tax, assessment of income. We are talking about computation of tax liability. So income is already given. You just need to know the tax rates of different types of SSCs. Firms, LLP 30%, local authority 30%, cooperative societies like this. Slab rates are applicable. Then what about company? Another very important aspect, company. So in case of a domestic company, important point here to note, if the total turnover or gross receipts, once again be very careful, are we talking about profit here? Profit means income, that is net of expenses. Are we talking about that here? No. We are talking about turnover or gross receipts in the previous year 2017-18. Once again, is it our previous year? No. Some other previous year prior to that, much before that. Our previous year is 2019-20. We are not even talking 18-19. We are talking 17-18. If the turnover in 2017-18 is less than or equal to 400 crores. In other words, for understanding purposes, we can call them small and medium scale companies where the turnover is less than or equal to 400 crores, but not in the current previous year, in the previous year 2017-18. Once again a question comes, is this 400 crores relevant for calculations? Absolutely not. It is not at all relevant for calculations. Then why is it relevant? It is only a condition. What is the condition? If the total turnover or gross receipts in the year 2017-18 does not exceed 400 crores, then the rate applicable on the domestic company is 25% of total income. Once again, no slabs. For companies also no slabs. There are only two tax rates. Any company will fall in only one category. One company cannot be both. First of all, a company could be a domestic company or a foreign company. If it is a domestic company, it might have a turnover of less than or equal to 400 crores in the year 2017-18, in which case the tax rate applicable is 25%. In all other cases, it is 30% of total income, of course, when the company is a domestic company. So for the bigger companies with a turnover of more than 400 crores, the tax rate is 30%. For little small companies or medium scale companies where the turnover is less than 400 crores, for them the tax rate applicable is 25%, which can be considered as a concessional tax rate to small and medium scale industries. That is the benefit given to them. But points to be noted here, we don't care about the turnover of previous year. We have to look at the turnover of which year? we have to look at the turnover of 2017-18, not that of 2019-20. To confuse, we will give that. You should not look at the turnover of 2019-20 at all. But income is earned in which year? That is in 2019-20. Tax is to be calculated on which income? That is the income earned in the year 2019-20. But at what rate that has to be taxed? That depends upon turnover achieved in 2017-18. If it did not exceed 400 crores in 2017-18, that is turnover, not tax, not income, turnover. So if turnover did not exceed 400 crores in that year, then the tax rate applicable is 25%. So only to get a clarity of whether 25% tax rate is applicable or 30% tax rate is applicable. One of them only is applicable. Only for that purpose, we have to check the turnover of this company, domestic company, for the previous year 2017-18. That's all. So, if that is the case, means what? If the turnover in 17-18 did not exceed 400 crores, then 25%. If it exceeded 400 crores, then 30% of what? 30% of not turnover, 30% of income earned in 2019-20. So be very clear with the years. Turnover is related to different year, income is related to different year. Tax rates are applicable on the income of the previous year. Only for identifying which rate of tax is applicable, you have to look at the turnover of previous year 17-18. Once you identify that, just ignore that turnover. It is not at all useful for calculation purposes. That is about domestic companies. What about foreign companies, or you can say companies other than domestic company? In that case, the tax rate is a flat rate once again, 40% of total income directly. Here there is no concession, directly 40%. So firm LLP 30%, local authority 30%, cooperative society little bit slab rates are there, 10%, 20%, 30%, depending upon the income not exceeding 10,000, 20,000 and exceeding 20,000. So that is the cooperative society. Company straight away either 25% or 30% depending upon the turnover in 2017-18. For a foreign company, it is 40% directly. These are the flat rates in relation to different types of SSEs. That's all. These are all the persons, right? Do we have any other persons who can be SSEs? What was the definition of person? Individual, yes, person, HUF, person, firm, LLP, company, AOP, BOI, artificial juridical person, local authority. Now we have the tax rates of all types of persons who can be SSEs. But tax rates in relation to individuals, HUF, AOP, BOI or other artificial juridical persons, all of them are contained here as we discussed earlier, which are slab rates. But when we talk about the rates of firm or LLP, it is a flat rate of 30%, local authority flat rate 30%, cooperative societies is only one speciality which is given as little different slab rates. Then when it comes to companies, once again flat rate, no slab and all, straight away 25% on income is calculated as income tax or 30% on income is calculated as income tax depending upon whether that company had a turnover of less than or equal to 400 crores in year 2017-18 or not. So that is for domestic companies. Foreign companies straight away 40%. That's it. These are the tax rates of all types of persons. Everything is covered now. Now coming to another very, very important aspect of surcharge in relation to other types of SSEs. All the surcharges for the assessment year 2020-21 are summarized in this particular diagram. This you have to remember well. Of course, in that almost half of that we know. There is nothing different there. That is already known to us in relation to individual, HUF, AOP, BOI. AJP means artificial juridical person. What are the surcharges already we know? If the total income is below 50 lakhs, no surcharge. Income is more than 50 but less than 1 crore, surcharge is 10%, we know that. If the total income is more than 1 crore but less than 2 crores, then surcharge is 15%. If the total income is more than 2 crores but less than 5 crores, then surcharge is 25%. If the total income is more than 5 crores, 37%. That's all. So these are the surcharges which we know already in relation to individual HUF, etc. Now what new surcharges we should now know, now remember, are for other SSCs. Look at this, for cooperative society, local authority, firm, LLP, for all of them only two possibilities are there. No different surcharges, only two. If the income does not exceed 1 crore, no surcharge, nil. If the income exceeds 1 crore, surcharge is 12%. 12% on what? Always that is common. 12% is always on income tax. Surcharge is always on income tax. Then why with this 1 crore? Only condition checking. If the income is not exceeding 1 crore, no surcharge. Income exceeds 1 crore, 12% surcharge on income tax. For whom? Cooperative society, local authority, firm and LLP. So that is very simple. Only one rate is there, that is 12%. You have to remember the threshold here. The threshold here is 1 crore. Up to 1 crore no surcharge. After 1 crore, 12% of income tax is considered as surcharge. Then, coming to the company, company has multiple things here once again. Here, domestic company having different surcharge levels, foreign company is also having different surcharge levels. And also if you observe, tax rates are different also for domestic companies and foreign companies. Now, domestic companies, what are the surcharges? Let us see. If the domestic company's total income is less than or equal to 1 crore, income we are talking, not turnover, nothing else. Income we are talking. Surcharge is always as a condition based on income. So here, if the domestic company's total income during the previous year is less than or equal to 1 crore, means up to 1 crore, no surcharge. Up to 1 crore, no surcharge everywhere. For firm also, up to 1 crore, no surcharge. For company also, up to 1 crore. Domestic company also, up to 1 crore, no surcharge. For foreign company also, up to 1 crore, no surcharge. So for anybody other than individual, up to 1 crore, there is no surcharge. For individuals, there is one more thing, that is between 50 lakhs to 1 crore, 10% surcharge. Other than that, all the other types of SSCs, no surcharge up to an income of 1 crore. That is very clear. More than 1 crore, that changes. For a firm, LLP, cooperative society and local authority, if the income exceeds 1 crore, surcharge will be 12% of income tax. For domestic company, it will be 7% of income tax, but not 12%. However, when this 7% is applicable, only when the total income is somewhere between 1 crore to 10 crores. So, once again, is this at all useful? This line, all these are all useful for calculation or not? Answer is absolutely no. They are not useful for calculation. These are all if means only condition. Calculation is to be what? Percentage on what? Percentage on income tax, base tax. So first you calculate tax according to tax rates. Then 7% of surcharge will be applicable if the income of the domestic company is more than 1 crore but not exceeding 10 crores. What if the total income of the domestic company exceeds 10 crores? Then the surcharge rate applicable is 12%, just like a firm. So understanding our purposes, intent of the statute is, for a firm, if you observe, the rate of tax is also more, 30%. Surcharge is 12% directly as soon as the income exceeds 1 crore. For a domestic company, whether public limited or private limited, doesn't matter, company is a company. For a domestic company, if the total income exceeds 1 crore but does not exceed 10 crores, for them surcharge is only 7%. So there is a 5% lesser surcharge applicable when compared with firms. So you can understand this way, the intent of the statute is to encourage small businesses to come into the company form of legal ownership rather than partnership, LLP and all. Because partnership, LLP, they have higher rate of tax also and higher rate of surcharge also. Of course, they have their own benefits. We are not entering into the discussion of which is a better form of legal structure for income tax purposes. There are certain benefits here, there are certain benefits here. But the intention here is, for company, there is a surcharge of 7% only if the income is between 1 to 10 crores. 12% is coming back only if the income is exceeding 10 crores. Whereas here 12% is starting only when the income exceeded 1 crore itself. So little bit relaxed surcharges are there for domestic companies when compared with firms and LLPs, etc. Now coming to foreign companies, of course there is no surcharge till 1 crore income, that is always common. However, the rate of surcharge is not even 7%, it is 2% on income tax payable if the total income is between 1 to 10 crores. So this condition is same, but surcharge rate is differing between domestic company and foreign company. For domestic company, if the total income is between 1 to 10 crores, the surcharge rate is 7%. For foreign company, if the total income is between 1 to 10 crores, then the surcharge rate is 2% of income tax. Same way for domestic company, if the income exceeds 10 crores, the surcharge is 12%, whereas for foreign company it is only 5%. So these are the rates that you should remember, and also the thresholds you should remember. See how many things are there. All this table is going to be very important, particularly for MCQ purposes. And not only that, for the next discussion of marginal relief, we should know surcharges, because marginal relief is something which is applicable only in case where surcharge is applicable. So for that purpose also, this table everybody has to be very thorough with. So these are the surcharge rates applicable for different types of SSCs and different types of incomes that those SSCs have. For individual HUF, etc., the surcharge rates are nil, 10%, 15, 25 and 37 depending upon the income, whatever the range of that income. For firm LLP, two rates only, either nil or 12%. For domestic company, three possibilities, either nil or 7% or 12%. For foreign company also three possibilities, either nil or 2% or 3%. Any one of them only will be possible, multiple things are not possible. Anybody's income will fall in any one of those categories only. So any particular case, our job is to find out which branch that case belongs to. What we have to check there? First of all, we have to check what is the nature of the SSC. That is first point. Second thing is, we have to check what is the income of the SSC. Accordingly, we have to decide what is the rate of surcharge applicable to that particular SSC. So this is how surcharges have to be calculated for different types of SSCs. Now let us just take some examples for understanding the application of these rates of taxes, including surcharge, if any applicable. So let us take some examples in relation to, say, a firm. So let us say AB or AB and Co is a partnership firm. Let us say a firm. It is a partnership firm. Let us say it has an income of 80 lakhs 80,800, just for example purposes. Let us say that is the income of this particular partnership firm, and we need to find out the tax liability finally. How to find it? Here it is much easier than individuals. Why? Because there is no slabs also. Directly you can calculate. So this is the income. Of course, rounding provisions will apply to anybody. Since it is already rounded, no need of 288A. Directly we can start with direct calculation of tax. What is the tax rate for a firm? That is 30%. That is 30%. Okay. So here unnecessary commas were there. So let us take this. So what is the tax rate applicable for a firm is? That is 30%, which means the tax that has to be paid by the firm, base tax we can call it, is 24 lakhs 24,240. So this is the income of the firm. This is base tax, right? Income and base tax. Then after base tax, there may be surcharge, there may be cess, definitely cess will be there, there is no maybe there. Then finally, what is the total tax payable? So in this case, is there a surcharge? Answer is 0, no. Why? Since the income of the firm did not exceed 1 crore. Surcharge for a firm is applicable only for income of more than 1 crore. For that purpose, there is no surcharge. Cess of course is there. That is going to be how much? 4%. Always it will be there. Health and education cess. Then what is the total tax payable? Base tax plus cess. Of course, that has to be rounded to the nearest multiple of 10. That is the calculation methodology in relation to firm. Let us take another firm just for understanding purposes. Say X, Y and co is there. This is also a firm. Now let us just take the income as say 1 crore, right, 99 lakhs 90,900 just for example. So 1 crore 99 lakhs 90,900 is the income. Base tax is nothing to calculate, directly 30%, no slabs, nothing. So whatever income, multiply with 30%. Is there a surcharge here? Answer is yes. Surcharge how much for a firm if the income of the firm exceeds 1 crore? Here the income of the firm exceeds 1 crore. How much is the surcharge? 12%. So 12% on what? That is important. 12% on base tax. That is surcharge. Then cess is what? Cess we have to calculate on tax plus surcharge. That is how much? 4%. Understand this carefully. Base tax plus surcharge into 4% is the cess. So how much is the cess here? Whatever that amount is. So finally what we have to calculate is base tax plus surcharge plus cess. This is the tax payable in the case of firm X, Y and co, which has an income of 1 crore 99 lakhs 90,900. How much they have to pay? 69 lakhs 85,620 as tax. Why? Because base tax of 30% plus a surcharge of 12% plus a cess of 4%. This 4% on both base tax plus surcharge. Like this, income of firm can be calculated. What if these are LLPs? Will there be any difference? Answer is no. Even in the case of LLPs also, the same type of calculation will happen. What if this is some other thing? This is some other thing, like let us say local authority. Local authority. Will these calculations change? No, because for both firm and LLP same rate of tax, for local authority same rate of tax. Even for surcharges also, for local authority, firm, LLP, cooperative society, same surcharges. So that is why there will not be any difference in these calculations. In case of a firm also, LLP also, local authority also, all of them will have same type of calculations. However, in case of cooperative society, definitely there will be difference depending upon the income of the cooperative society. There will be slabs applicable. In the first case, whatever the income is less than 10,000 rupees, multiply that income with 10%. That is the tax payable, plus 4% cess of course is applicable. Second case, if the income is between 10,000 to 20,000, then income minus 10,000 into 20% plus 1,000. If the income is above 20,000, then income minus 20,000 into 30% plus 3,000 is the base tax in case of cooperative societies. Surcharge is different. That is only applicable if the income exceeds 1 crore. That is how much percentage? Same 12% percentage. If total income of the cooperative society exceeds 1 crore, in that case only surcharge will be applicable. Cess is common in all cases. Now let us just take some example. Say GHMC is a local authority, that is over. Let us say cooperative society, say KDCC something. Cooperative society is there, some cooperative society, right? And the income of that cooperative society will take different ways and see how to calculate. If the income of the cooperative society is, let us say, only 6,000 rupees, that's all. And also just observe why this amount is kept low, so low. Ideally the cooperative societies are not for profit organizations. They are not supposed to make too much profit. So their profit, even though it is low, there is a lower tax rate because of that. So 6,000 rupees, let us say, if it is the income, then directly what is the tax rate applicable there? That is 10%. Is there any surcharge? No, nothing. But is there any cess? Yes, definitely. So what is going to be the total tax payable? That is 624 rupees only. That is a cooperative society situation. So let us take another example. Let us say if the same cooperative society has an income of say 16,000, then what? Then this calculation will not hold good. whatever the amount of income is minus 10,000, right, minus 10,000 into 20% plus 1,000 is what we are supposed to do in this case. So what is happening here? Up to 10,000, 10%, which is 1,000, which we added. More than 10,000, 6,000. 6,000 into 20% is 1,200. So 1,200 plus 1,000, 2,200 is the base tax. No surcharge here because income did not exceed 1 crore. Only 16,000 is very less. No surcharge. But cess of course will be there in all cases. Then the total tax payable in this case will be 2288. If rounded, it becomes 2290. That is the another case of cooperative society. Let us take another case of cooperative society where the income is little bit more. Say the income is 6,16,000. Then what? Then the calculation is still different. Then we have to see how much is the income in excess of 20,000 into 30% plus 3,000. So the base tax here will be 1,81,800. Income minus 20,000 into 30% plus 3,000. That is what we are talking about here. Income minus 20,000 into 30% plus 3,000. So in excess of 20,000, how much our income is there on that 30% plus 3,000 is in relation to the earlier slabs, these two slabs. Total is 1,81,800. Is there a surcharge here also? No. Why? Because income did not exceed 1 crore. So cess is common 4%. Final tax liability is 1,89,070. After rounding it, 189,070 will be the tax liability of this cooperative society. Let us just take another cooperative society just for understanding purposes. Say another society is having 2 crores, let us say 61 lakhs 60,000. 2 crores 61 lakhs 60,000 is the cooperative society's income, right? Then what? Base tax is calculation same. Whatever the income minus 20,000 into 30% plus 3,000. So base tax is 78 lakhs 45,000. That is clear. But here there will be surcharge. So how much will be the surcharge here? Whatever the base tax is, on that 12% surcharge will be applicable in case of cooperative society earning a total income of more than 1 crore, which is the case in this case. So 12% should be calculated on income tax, not on income. So on income tax, how much is the surcharge here? That is 9,41,400. Cess is common. Cess is what? Cess has to be calculated like this. Cess has to be calculated on the total of this. So base tax plus surcharge into 4%. That is cess. Adding all these three, final tax liability will be 91,37,860. After rounding it, 56 becomes 60. Like this, cooperative societies has to be calculated. As examples, we have taken firm, LLP, local authority, all are similar calculations. Cooperative society are having slab rates of tax for calculation purposes. Surcharge is common for all of them. Up to an income of 1 crore, no surcharge. More than an income of 1 crore, a surcharge of 12% on income tax shall be calculated in all these three cases or four cases: firm, LLP, local authority and cooperative society. Then coming to the companies, there are domestic companies and foreign companies. Domestic companies, base rate of tax depends upon turnover in the year 2017-18. Then a question comes, sir, what if the question does not say anything? If it does not say anything, assume that the turnover is less than 400 crores in the previous year 2017-18 and apply 25% tax rate only. So because why generally the companies with more than 400 crores turnover in the previous year 17-18, even according to the Ministry of Finance itself, there are only 1% companies falling in this category of 30%. 99% of companies in India are falling in the category of 25% because their turnover in the year 2017-18 was definitely less than 400 crores. Naturally, there will be very few number of big companies huge number of small companies will be there. In India also it is the same situation. Irrespective of all that, if it is given clearly in the question, take according to the data given. If not given, take 25% base tax rate for companies which are domestic companies, but you have to write an assumption assuming the turnover in the previous year 17-18 is less than 400 crores. So that is the base tax. Once you have base tax, surcharge rates depend upon the income. If the income is less than 1 crore, no surcharge for domestic companies. If the income is between 1 to 10 crores, then the surcharge rate is 7% only. If the income is more than 10 crores, then the surcharge rate is 12%. But the same things for foreign company will be nil, 2% and 5%. According to the income of the company, surcharge will be applicable. However, base tax is applicable from first rupee. No slabs here. Flat rate has to be applied on the total income. Which rate? 25% or 30%? That depends upon the turnover in the year 2017-18. Like that. So that is about this domestic companies. Foreign companies 40% flat rate plus a surcharge of either 2% or 5% as the case may be. That is the application of tax rates for companies. How to calculate this? We can take some examples once again just for understanding purposes. So there is a company, say A Limited is a company having a income in the previous year of, let us say, 2 crores 33 lakhs 45,679. So let us first of all round it to 680. 2 crores 33 lakhs 45,680 is what? The total income of a domestic company. And we are taking 25% rate, assuming the turnover in the past, whatever 2017-18 is less than 400 crores. That is turnover, not profit. This is profit, not turnover. This is profit on which the tax is payable. Turnover is not something for which is useful for calculation. That is only for a condition checking whether 25% rate is applicable or 30% rate is applicable. Let us take 25% in the absence of any information. So 25% rate is applicable, base tax rate on the income of the SSC during the previous year. This is base tax. Okay. So once we have base tax, then surcharge will come. These are the same things: income, base tax, surcharge, cess, and total tax payable. So this is the SSC's name. So base tax is there already. Surcharge will be how much here in this case? Domestic company here, and income is more than 1 crore but less than 10 crores. Then what is the surcharge rate applicable? Surcharge is 7%. If the income is not exceeding 10 crores, surcharge is 7% of tax payable. So 7% is surcharge. Cess is common. Cess is like what? We have to first of all add these two. On that, 4% has to be calculated as cess, and the tax payable is the total of all of this. Of course, after rounding it will be how much? 64 lakhs 94,770. That is the tax payable by this company if it is a domestic company with a rate of 25%. So what if the rate is 30%? Base tax will change, surcharge amount will change, rate will remain the same because the income of the previous year is between 1 to 10 crores, surcharge rate is 7%. Cess is always common, 4%, that will not change, amount will change, 4% is common. So that is how, when the total turnover of the company in the 2017-18 is changing, base tax of the company will change because the rate will change from 25 to 30%. If nothing is given, take 25% as tax rate for domestic companies. Right? Imagine now, let us just add one more here. Imagine if the income of this company is 12 crore 33 lakhs 45,680. 12 crores. And also imagine the rate of tax applicable is instead of 25%, it is 30%. When it will be possible? Only when turnover in the year 2017-18 was more than 400 crores. If that is the case, yes, base tax is 30%. Let it be like that. Then surcharge is applicable in this case or not? Answer is yes, but how much rate? Not 7%. The surcharge applicable rate is 12%. Why? Since the income of the company is more than 10 crores. So 12% surcharge is applicable. 4% is common. Then total tax payable is how much here? 4 crores 31 lakhs 1910. That is the tax payable in this case. So what all change here? Base tax rate will be different, surcharge rate will be different, cess rate is not different, and cess calculation methodology is also not different. Tax payable of course is the total of all these three. That is final amount 4 crores 31 lakhs 1910 after rounding. If it is a domestic company. Same income, let us say, just for understanding purposes, let us say if it is a foreign company, what changes? Just 30% becomes 40%. Yes. Then the amounts change. Then what also changes? Surcharge changes. What is the surcharge in case of a foreign company with an income of more than 10 crores? That is 5%. Changes. Cess is same. Total tax payable is different now. 5 crores 38 lakhs 77,390. So things how they change according to the situation is what we have to be very careful. So if the income is this much and it is a foreign company, 40% is the base tax. Surcharge rate for that case is 5%. Cess is always same. Total tax payable is the total of all these three. Then another example let us take. Say this means what? Say for a foreign company 1 crore 33 lakhs 45,680 let us say. For a foreign company this is the income for the previous year 2019-20. 1 crore 33 lakhs 45,680. How much is the base tax? That will not change, that is 40%. Surcharge will be different because what is the surcharge for a foreign company? If the income is between 1 crore to 10 crores, that is only 2%. So surcharge will be different. Cess is common. Final answer is this. How much? 56 lakhs 62,840 after rounding. That is for foreign company. Like this, any number of examples can be taken. But what is important to remember is rates of tax here, which are related to firm, LLP, local authority, and cooperative society, which are all part of this. This has to be remembered. And the rates of tax in relation to domestic company and foreign company have to be remembered. Most importantly, the surcharge rates for all of them have to be remembered. So after the individuals, next level of understanding for rates of tax, actually it is easier than individuals, but only point here to note is surcharges have to be clearly remembered for each case. So with that, all types of SSCs, computation of tax liability is completed. So the objective of this chapter is finished, it is achieved. But don't forget, we still have one sideline concept actually, that is marginal relief. We will come to that marginal relief in the next session. Right now all the steps are done. We know how to round it, we know how to calculate base tax for all types of SSCs. See, all types of SSCs base taxes are mentioned in Finance Act: individual, HUF, AOP, BOI, artificial juridical person, slab rates. Individuals with 60 years and 80 years, little bit different basic exemption limits. Then firm, LLP and local authority 30%. Cooperative society once again slab rates. Companies, domestic companies either 25% or 30%. For foreign companies 40%. These are all base rates of tax. Rebate is only for resident individuals, so we don't need to worry about any other SSC. Only for resident individuals, rebate of 87A is applicable up to a maximum of 12,500 rupees, we know that. Surcharge is there for many people. Individuals, surcharge will start as soon as the income of the individual exceeds 50 lakhs. For others, surcharge will start when the income exceeds 1 crore. And different types of surcharge rates are applicable. This summary is what you have to remember always very thoroughly. This table you have to be absolutely remembering thoroughly. That is surcharges related table that we have discussed, and you should remember that and apply them. And surcharge has to be always calculated on tax, base tax, not on income. That care has to be taken. Marginal relief we did not calculate. That is the only thing remaining. We know how to calculate cess. Cess to be calculated what? Base tax plus surcharge. On that 4% cess has to be calculated in respect of all SSCs. No difference in case of 4%. This is one thing which is common for all types of SSCs. Once we have this, round it once again under section 288B, then what we get is tax liability of any SSC. With that, tax liability computation for all types of SSCs is completed. Hopefully everybody is understanding and able to apply these provisions while doing the calculations. If you are facing any difficulty in any particular situation, don't hesitate to ask me in the group or separately at your convenience. But one point for sure, everybody should be experts of calculating the tax liabilities. Later on, when we actually calculate the incomes and the tax both in the same problem, explanation will not be given for how to calculate tax liability. That will be assumed to be known by everybody. That is why these are ABCDs of taxation. Everybody should know basically what are the basic terms in taxation. Everybody should know basically how to calculate tax liability. These are clerical things, but important things. With that, we will conclude today's session, and in the next session, we will continue with the discussion on marginal relief, how to calculate that under different circumstances. And that will be almost the end of this chapter or topic you can call rates of tax. Till then, take care. Bye bye. Thank you.